all right. How you guys doing? Welcome back. Hope you guys had a very nice Christmas. Let's get started. We got that package finally approved. Just, the same old drama from Trump. Useless stuff. All right, so let's go through it because I have to travel tonight. We'll be going to Ukraine, so I'm not going to be here for the next couple of days. Anyway, going into the end of the year, it doesn't really matter all that much. They're not going to do anything crazy, is what I'm trying to tell you. So we're not going to miss out on a whole hell of a lot. We need to see how it's going to be next year. So um, let's let's just kind of go over through everything, see what the message of the market is. Equal weighted S&P pulling back, flatlining over here. Dividend weighted ETF rebounded a little bit. VIX right back down. New York Stock Exchange, it's going sideways. Dow Jones a little bit higher, right? It was falling here. It started to break down and then popped right back up. So now we have an expansion of the flag. It's a rising F flag. Okay, little wedgy, a little bit on the wedgy, but look for this to push through. S&P 500 to the highs now, right? All-time highs, and that makes sense. Think about it, right? You just pumped in another 2.3 trillion, gave $600, blah blah blah. Where's that money gonna go? Well, it's gonna go from the government. See if I can pull up my little thing here. Right, so it goes from government into the productive economy, household savings, profit savings, and goes right into asset prices. Okay, it's simple. It just keeps pumping in money. Again, you look at the amount of money that's poured into ETFs alone. Okay, it's actually higher than this now. I think it's up to 10%. This is an old one. But remember, when you give in ETFs money, they have to go out and buy equally throughout their whole entire portfolio, like it or not. That is just the mechanics of it. So keep that in mind. Okay, so the the bias is to the upside so long as you keep printing and pumping money into the markets. All right. Nasdaq all-time highs breaking through. The nice thing about this one, we'll come back to this one, right, is that it's now clear of the previous high. It's off to the races. There's nothing to stop it now, right? So this whole entire structure right in here is now just a consolidation, and now it's breaking out. All right. Uh, that's what we kept saying. It had some difficulties in here. It kept bouncing in and out of the previous high. And again, we'll come back to this. Okay, it kept going through and up and through and up, and now finally it's breaking out. All right, and it again makes sense. Small caps, all right, broke through, came back in to structure. You had a rising wedge. This should have failed here. It didn't. It came back, popped through, and now it's back into structure. We'll see how this resolves. You do have a channel in here, right in here. All right, there was a fuckery move here. Now, let's see if this is going to break through. You break the bottom, you break the top, right? Break the bottom, break the top, and then you start to correct. Transportation's averages still in a bull flag, but they have not pushed higher. IPO, which is the new IPOs in the last 2 years, pulling back. So they're not chasing this one. They're taking profits on this one. If I'm not mistaken, it's up some ridiculous amount for 2020. I'm not going to guess. I'm just going to check it out here, and it's up 238% for the year. Right, so they're taking a little bit of profits here. Even if it breaks through here, we'll see what happens. For today, it's down 3%. ARC, which is something similar, that is also pulling back a little bit today. When you look at the fangs, all right, they're still in a tight situation, but they are now trading above the point of control. All right, there's a point of control, the POC right in here. The other POC is all the way down here from the March lows. All right, so look for this one for the market to push higher. That this has to break to the upside of this wedge. All right, it's just going sideways for now, but Perhaps today or tomorrow it will start to punch through. All right. Europe broke down and then popped right back up. So nothing there. Remember, we have these two previous highs to contend with. All right. So you can still see it come up here and then start to correct. UK, they made the deal, whatever. It's popping back up. Germany pushing up against the previous highs. And, let's see how this is going to perform. Again, this one has so many head and shoulders in here, I don't know what to do with them, to be honest. So for right now, it's pushing up against the previous high. Let's see if it can make new all-time highs along with the rest of the markets. Denmark has just been kicking ass all over the place, just soaring, right? This is the World Stock Market Index. Okay, continues to push higher. Didn't make a new high. The US didn't make a new high. Airlines are starting to make a little bit of a pop here. It's a little bit tricky. It's a little bit tricky because it broke the bottom. Now it's breaking the top. So let's see if there's follow through here. Okay. For today or yesterday, actually, we hit a new post-COVID high at 1.284 million people that have traveled. Okay, so usually it's about 2.5 on the high end, 2.6 and so forth. So this is a significant number. It is an improvement for sure, but think about the new COVID, right? 70% more infectious. You have all these people traveling around. It gets ugly. It can really get ugly. And I know we have vaccines and all these things, but between now and um, when the elderly get those vaccines, how ugly does it get, right? Airlines, we talked about that. My little indicators back up to flat. China, nice little big move. Now there's some talk about monopolies, and to me, I think it's garbage. It's nice for the masses. Oh, we're gonna go after them. They're not gonna do shit to them, I don't think. So anyway, it's kicking ass for now. Um, CQQ is the fangs of China. They're pulling back. We're still waiting for this one to push up, and it's not doing a good job of it, right? In fact, it's starting to break down or correct through time. Not doing a good job. Let's see if it can hold this previous low right here. Okay. Let's see if it can hold that. If not, it's probably going to do one of these jobs. It'll kind of like make a third wave down and then start to go back up on a different trajectory. That's what I think will probably happen. Nifty 50 pushing up against all-time highs. Japan broke down. See, this is what I'm talking about. Right? You kind of correct. You do this bullshit move down, and then you pop up, and off you go. Right? So everything looks bullish. Everything looks good. Um, Taiwan pushing back up. Korea back up. Saudi hasn't broken out yet, but again, we have this arrow here for a while. Look for more upside. Australia is still in the rising F flag. Again, with the rest of the market, should push higher. Brazil is having some difficulties. Let's see what happens with that. It's correcting through time. This is not a valid yet. Okay, it's not a valid uh, point to anchor because the hook is not enough. So let's see how that works out. Emerging markets kind of broke down from this little trend line going sideways. Emerging markets, the other one, the EEM, just correcting through time. The BRICS, Brazil, Russia, India, China, correcting through time as well. So you can see that there's not a whole lot in the emerging markets, right? Not a whole lot. Real estate is sideways. Again, we're looking for more upside here. Financials, they broke out. Now, somebody said something about collapse of the financials and man. Bullshit. You can't have a collapse of the financials and the market go higher. That's just dumb. Right? It doesn't even make sense. But, that's the kind of stuff they run around telling people. Um, Oil. Okay, still in an F flag, rising. Um, with commodities rising, the dollar falling, money being pumped into the economy, it's very difficult for this one to go down. Right? We said the target was around 50. Now with this new money printing, you can go much higher than that. Gold popped, came back. Look for this one to break to the upside. Okay, over time. Silver starting to push back up again. This was one of the calls that I made when it broke out from this structure. It's doing good. Look for further upside. Commodities overall still in a rising wedgie looking thing. Okay, same thing here. It had a flag. It's correcting through time. Precious metals ETF breaking out. We had this arrow here, right? We said that this structure, this 1, 2, 3 structure here, is going to resolve to the upside. That's what it's doing, so that's good. Base metals correcting through time, wedgie. Wedgie means possible correction. Steel finally kind of, taking a break. Palladium pop right back down. I think this will pop again. Okay, look for this one to push higher. Copper continues to push higher. Agriculture, right, pushing higher. But remember, this is problematic. You don't want this to go up because people are going to start feeling it in the supermarket. They're going to start getting pissed because that's when they're going to realize what all this printing means, right? When they start seeing it in the supermarket and they're trying to buy food and they're like, what the hell? It's going higher. And then they're going to resolve and start to understand that it's the money printing. Sugarcane, we're still waiting for this to break out, getting closer. Corn, kicking ass, straight up. Wheat, okay, broke, pulled back. I think this goes higher. Soybeans really just exploded. Nat gas, forget about. Bitcoin, what did I tell you? 27, right? There it is, 27. And the funny part is that it is accelerating to the upside. Okay, there's an acceleration there, so um, this can get to 30, the blink of an eye at this point. So it's incredibly bullish. It's just everybody's chasing it, and the higher it goes, the more people are going to chase. Blah blah blah. Who's going to short this now, right? Who's going to short it? Who's going to sell it? Okay, nobody's going to sell this now. Litecoin pushing higher. Ethereum pushing higher. Right? We said this is going to be a wave 3 up, right? This was a 1. This whole thing was a 2, and this is a 3 up, right? So we're looking for this one to test the previous high at least. And here's Ripple. See, this is why I don't like these secondary kind of cryptos, because you don't know which one is going to blow up. Now this one should have pushed higher. It had all the settings, everything looked nice, and boom. Right. Stick to Bitcoin. Don't get too fancy. Dollar closer, correcting through time. Starting to pop a little bit here. All right. We needed a correction from this structure. Let's see how far this runs. Special drawing rights of the IMF, not doing a whole hell of a lot. US dollar is popping a little bit, but it's still within the structure. You need this structure eventually to correct, right? I don't know when it does it, but it has to correct and then resume to the downside. Euro, US dollar, rising wedgie looking thing. Pound, we're still waiting for this one to break out. It's just being very annoying. Very annoying. So, double topping for now. Let's see if there's a deeper pullback. But eventually we're going to come up here and then continue on up. US dollar, Turkish lira, they raised their interest rate. It's falling down a little bit. I don't think it's going to last too long. US dollar is weakening against the ruble. US dollar is still in a downtrend. The loonie. Australian dollar continues to push higher. New Zealand, we said these are long-term plays. You want to hold them. Mexican peso is just correcting through time in a bearish type of weird looking thingy right in here. Okay, so look for more downside on this one. US dollar won correcting through time, and the euro index is still in a rising F flag. We can expand it a little bit. Okay, so look for more upside. All right, 10-year. There it is, starting to push higher. And again, once it breaks its previous highs, right, cup and handle all over the place, look for this one to resume to the upside, which makes borrowing more expensive, blah, blah, blah. Not good for pumping money into the economy. All right. What else? What else? IBB, we said this one was going to push higher. It did. Very nice. Water, that's good. Hotels are starting to pop a little bit here. All right. And hotels versus jets, they're starting to rise again. Okay. So let me fix this a little bit. So it's in a rising F flag. So what we can expect is that it will just kind of continue in here until either it breaks down or goes super bullish. Royal Caribbean still, in the correction phase. Norwegian breaking out, right? Carnival breaking out. Remember, these are the catch-up plays. All right, these are the catch-up plays. So if you were to play the catch-up, right, you want to make some dough. These are the ones you want to buy, okay? Because, for example, Carnival is up 5% today. Norwegian is up 4.6, and Royal Caribbean is 3.3. Apple, look at that. They're going to sell cars now. Look at that. They're happy. So expect at least a double top here, all right? And then we'll see how it resolves. Amazon, a little bit of a pop. Look for this one to push higher. Same thing with Microsoft, Facebook. Facebook, you can actually almost take this. I think this comes back into structure and goes higher. Because remember, without these pushing higher, I don't see how the market doesn't go higher, right? Or, you need to see these things go up for the market to continue to push higher. Netflix in this bear flagish looking structure. Google looking like a nice little breakout here. Look for further upside. Nvidia is lagging. Okay. It's lagging. It looks like it wants to test some previous lows here. Right. This is one here. If I can fix it right. Okay. And then the other one is somewhere down here. Right here. So somewhere in here is where it wants to pull back. Right. And then bounce. So keep that one in mind. Tesla, yeah, baby. All right, just kind of going sideways for now. PayPal, a little bit of a pullback. Snap is a new one that I've kind of added. Look for a little bit more pullback on this one. Okay, but then ultimately it goes higher. Shake Shack, nothing there. All right, let's go to Delta. Delta is starting to break out. American is starting to break out. Southwest already broke out. Alaska definitely broke out. JetBlue broke out. Spirit, right, trying to go back up. Allegiant did a nice breakout. Hawaiian just breaking out now. And SkyWest still has not. Right. Then you got Ryanair, EasyJet, Copa pulling back a little bit. China Eastern Airlines pulling back. Turkish up against resistance. All right. So overall, the market looks bullish. Some of them are pausing. Some of them are really breaking out. But there's nothing that's bearish. Now, you do have big structural, on the bigger time frame, some structural bearish patterns, right? But again, you got to wait for these things to start to break down. You can't, just because this is a bearish structure, you don't go out and short it, obviously, right? So let's talk a little bit more about the Nasdaq. All right, it's incredibly bullish. It's out to the races now. Let me just take this off. All right, so there it is. Trajectory is going to start to kind of look like this. Right, going to start to shallow and continue to push higher. And that means trillion-dollar companies are going to become $2 trillion companies as this goes higher. So, let it be. Let them bid up prices on themselves. Not an issue. Look at the small caps, right? PE is like a gazillion. So let them bid up prices. Pick your risk rewards. Take it to the long side. Take your profits. Get out and wait. Wait. This will eventually correct. They always correct. It just never seems like it at the time, right? It never looks like it's going to correct. Just like it didn't look like it was going to ever go back up again when it was all the way down here, right? Okay, so it's got nothing to do with fundamentals, but eventually the fundamentals will matter. That I can promise you. When, I don't know. No idea. No idea. Not my job to know. All right, so here's the breakout. But again, let's take a look at it from a perspective of the dollar, right? You want to know how much in dollar terms this has broken out, and it's still below the previous high here made on December 21st. It's grindy, not really breaking out. You can make an argument that, oops, let me put the drawings back in. There you go. Okay, so you can make this argument here that it's a rising little wedgy thingy. It's building that pressure, right? Building that pressure, building, and eventually it's going to do this. Okay, so let's see if that happens. Alternatively, if that doesn't happen, then this will start to happen, right? It will start to break down for one more down, and then we'll see from there. All right, S&P within the flag. Okay, we've noticed that. Also, note that we still didn't manage to have enough pressure to make it to the top of the trend line. Let's see if this time around it does do that. All right, point of control all the way down here. All right. But again, so long as you maintain above the previous highs, sky's the limit, right? Anything else that I want to talk about? Let me see. Because I got to pack. No. I know there's something, but it just can't come to mind right now. Salute, my friend. How are you? All times high. Woohoo. Any questions, anybody? Anybody, any questions? All right. Let's take a look at something I wanted to show you from the economic standpoint. No. Here's the dollar weakness, right? Bull market. All right. That was something I wanted to show you. Give me 1 second. There we go. All right. So here are. This is discontinued, but it doesn't matter because it's discontinued in 2020. But these are the required reserves right in here, right? That purple thing right in here, okay, from the banks. Now you can see prior to 2008, it was never an issue. You had a little bit of excessive reserves, and then here, right, you have a lot of excessive reserves everywhere. Okay, and remember that once we started to come all the way down here, when the reserves started to drain away, what happened, right? Markets started to tank, right? So people get very, very confused about reserves. Remember, there's required reserves, which are the purple. That's what banks are required to, to hold at the central bank. And the reason they have that is because in case there's a bank run, you gotta be able to give people money, right? You can't have a freeze, a lockup uh, of the banks if there was ever a bank run, and that's why they did away with it with COVID. They said, okay, you're free to use your reserves, right? So if there's a run, you can give them cash. All right. QE created more reserves. Well, how do you create reserves, right? What drains them? Well, people taking money out of the banking system, right? That's what drains reserves. So what does the opposite do? The opposite increases reserves. You understand? So people don't understand the difference between money printing in the sense of expanding the deficit. Money printing expanding the deficits means bond issuance. It doesn't mean dollars. It doesn't mean coins or whatever. Okay? It doesn't mean reserves. It doesn't mean any of that stuff. Printing that increases deficits, printing is bond issuance. There's an expansion of bonds. Reserves are just that. They're reserves. These are interbank, right? So if a loan creates a deposit, it creates a reserve. Okay. When you go deposit money in the bank, it creates reserves, right? So when you are selling a bond and you get it back, right, it goes in the reserves, but it doesn't matter because if somebody comes out and says, "Look," Buffett goes in tomorrow and says, "Look, I need $1 trillion of cash. Give it to me cash." What's going to happen to the reserves? Right? Reserves are going to start to drain. $1 trillion. Okay? Banks lend these reserves, interbank, because if you go out, right, and you borrow from Bank A, let's say, $1 billion, and you deposit that $1 billion in Bank B, Bank A has to put 10% of that at the central bank. Well, they used to before when they had reserves. So if that $1 billion did not go back into Bank A, they wouldn't or at least 10% of it, then they wouldn't have the reserves. They wouldn't have these reserves to go and put up at the central bank. So what would happen? Well, Bank A would go to Bank B, borrow 10%, whatever the rate was set by the Fed, okay, borrow those and then put them in the central bank, okay, to meet the requirements. Because remember, loans create deposits. If the deposits are withdrawn from that bank, that reduces the amount of reserves in the bank. Not only if those dollars are not if they're not invested in Bank B or something like that, they just pull the money out, pull out $1 billion. That's going to drain the reserves. If you put it back into Bank B, so you bought a house and you borrowed from Bank A and you paid the house to Bank B, then Bank B has the excessive reserves, and then those excessive reserves are borrowed from Bank A, but the reserves that was created from the loan is in the banking system is not going to change. You're not going to see a change here. Okay? Why? Because it's still in the banking system. Doesn't matter if Bank A holds it or Bank B holds it, right? Wherever that loan was created, that's going to create a new deposit. New deposits create reserves. So what people are getting confused at is they're looking at the banks. Oh, the banking system did this. The banking is the middleman for the high net worth individuals, companies like Apple and Google, Amazon, whatever. Okay, they're the ones with the money. Sure, banks have some profits and they do the same thing. But that's minuscule. That's not where banks get their money. The the money is owned by private entities, private high net worth individuals. All right. So when you QE, right, what are you doing? You're swapping, you're printing up money from the Fed, and you're buying it at the open market price, whatever that price is, set by the market, and you're taking that bond onto the balance sheet of the central bank. That's why when you look at the central bank balance sheet, it says $7.2 trillion. It doesn't say $7.2 trillion of reserves, right? Reserves, bonds, cash, it's all dollars. It's all dollars. Yes, reserves are used interbank. Agreed. Nobody's saying that that's not the case. But don't confuse the two. Because again, if I want to pull money out, you better have those reserves to cover it, or you're in trouble. You're in trouble, right? If a loan goes bad, what happens? Guess what? Those reserves start to drain very fast. So, and again, the word loan can be for anything. You can loan me money to go out and buy stocks, bonds, whatever the hell you want. This is not going to change because it's going from one bank to the other. Interbank. This is all interbank. That's not going to change. That is not going to change, right? So if you can make loans, you're creating money, right? It's in the private sector. It's in the banking system. But this will not change. Anyway, very frustrating when you're trying to explain it to people and they act smart and they think they're smart and they don't understand it, and then they try to make you look like you're the crazy one when in fact they're the ones that are crazy. Whatever. All right, so we had the nice little pop here for the rest of the day, and then I'll end it here. All right, we're doing this nice little F flag, and that's what usually happens. Okay. You're going to look for this to continue to go higher. If it starts to correct, it has to maintain that previous high, which is right here. It has to maintain above it. All right? And it definitely has to remain above this. All right? But again, at some point, right, this structure will start to correct. All right? Okay. So, oh shit. Did I? No, I did it right. I had the same page open on another browser. I'm like, wait, I was drawing all that on a different browser. Kind of freaked me out a little bit. Sorry about that. All right. So, anybody have any questions? Nope. Okay. All right, guys. Have a happy New Year. I'll talk to you before then, probably, hopefully. Um, for my subscribers, of course, I'm going to be on and off on the chat. Guys, don't forget to come down to patreon.com/RealMacro. Subscribe. Okay. Don't forget to hit the like and subscribe, blah, 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 so you guys know when I go live. So thank you very much. Crazy year, huh? Crazy year so far. Let's see what happens in the next few days. All right. Take care. I'll talk to you soon.